Hi guys, Dan with Index Option Trading on Monday, December the 19th after the market close, and we are looking at a chart of SPX. Look at this nice pattern that has been developing here. We're trading very tightly, close to each other every day, slightly up but slightly down, and we keep regressing in this channel and not violating it. This pattern, of course, was not visible when we were here. It looked like the market is going to drop, but it came right back up and then it dropped again accordingly. And accordingly, when I say, it means that this is a uniform pattern with two parallel lines between them. And what does this tell us? This is a bullish signal. It is a bullish pattern which always usually would break out to the upside. And that's whenever these patterns form, these are flag patterns, they are continuation, because this was the up move here, a big up move, and the market couldn't go higher. It started building this pattern since 12/7, so it's been in the making about 10 days, not very long, 10 days. And the market has gradually came down here. If it had to drop, it would have dropped here easily. It could have dropped right here, but it just keeps going back up here. As long as we're in this channel, we're good to go. This is going to break out to the upside about 80% of the time. 20% of the time, this can fail. So there is no guarantees on it, but this is what we can infer from these. And the volumes, the market is extremely oversold. Here, 136 in the McClellan oscillator. So that is done. And when the market is oversold, there's only one direction it does go. It can go down to another 200 points, but I mean, then when it gets oversold, it tries to bounce back, and that's what happened. But today was a day that had represented a lot of uncertainty in the market. Kim Jong Il of Korea died, and this pattern is also here, but I have not completed here, and I would not attempt to do it right now because it'll take a more longer, and I may not be very accurate. So that he died, and there was Asian markets fell. Then the European markets did not have an agreement from the IMF for the funds, and there are squabbles going on back and forth. That's what not the market like. And today the payroll tax, the Congress, the House rejected, and from the Senate and the Congress rejected the extension of payroll tax, and that again murkied the water. So all of these things, when they happen in tandem, usually bring the market down, and the volumes are not very good here. Let's take a look at the SPY. And what do you see here on the SPY? The same kind of a pattern here that I have seen on the SPX. And it is a uniform pattern, and I'm very pleased to see this. If it just maintains between these parallel lines, we're going higher most likely. You see this arrow is coming up here, but that's an automatic extension, and this is for dividends, not anything else. This thing is the volume was low compared to Friday. Friday was a big day because of the option expiration, and we're now in a different cycle for the January. And some of the stocks here, leading stocks, let's start taking a look at PCLN, and I've drawn some things over it here over the weekend. If you look at it, this PCLN has been doing nothing but moving in this parallel lines sideways. Since when? Since about June. It's been consolidating in this roller coaster range, which is between 550 and 440. The lower end is 440. We hit that on 1215, and I think we got out of that position and we consolidate. But there is a trend line here. This trend line needs to be broken, and the stock has to go above 470. Once it's over 470, we're going to see higher prices, but the volumes are declining on it as it moves up. So we just have to keep an eye. This is like a rolling chart, rolling thunder, one up, one down. And if you look at it, it's uniform. It's in a range. It's a range bound stock. It does not drop below 440, and it doesn't go up above 550. Some other stuff that is going on here, CMG, we take it very quickly and look at it, chart. It is forming a bottom here, and most likely it looks like it's going to form a bottom at 50-day moving average and then break out to the upside. So that is all we have for today, and as the market improves, we're looking to get into positions.